It is the 23rd of January with Brian Acker. And Brian, I haven't seen you since December, so let's begin with a brief year-end review.
Brief year-end review. The U.S. was around flat. I think we were down 1.5% versus the S&P at flat. So
I'll take flat. Given
it's
problems.
It is frustrating, but I guess the thing of what I can say for the year, if you made any mistakes during the year in terms of stock selection or what you did,
a lot worse than that.
You'd be a lot worse. So
it was shaping up to be such a good year. April, we're up 10%, and then boom, Europe.
10, 11%. We got into August, and Europe certainly came on the plate, and we've actually, when we hit the lows, probably in December, we've had a spectacular rally.
Oh, it's been a great rally. Indeed.
Since September, we're probably up 20%. But again, Europe hit us in August, and there might be some good news there. So as the market moves higher here, then we'll see. But
okay, well, last year we didn't price the European disaster.
We didn't.
Into the predictions.
So there you go. So
is the European disaster resolving itself?
I think the best thing I've heard is, you have the market and you got politics on top of the market.
Bad combination.
And the market just hates that. So, but I think Mario Draghi's done an excellent job since Trichet. He's been lowering rates. They don't want to call it quantitative easing, but now the European Bank has a bigger balance sheet than the Federal Reserve. Massive liquidity injection, certainly in all the banks, and we see that every day. So with the good news that's kind of coming, and now the Greek thing is in the headlines again, but I think if Greece even falls out, people are willing to say, okay, we're willing to live with that. So with the good news, seemingly good news, I mean, the markets have been working its way up. Don't forget earnings. Earnings are fantastic.
Is the rally because of Europe fears subsiding or earnings?
It's Europe. So everyone's worried about a Lehman type of scenario, especially in their banking system. So, if we can get Europe out of the headlines just for a little while, then I think this market does very well. So anyway, we're just...
So you think it's a positive year?
If you saw the research, if you saw the companies we own, like Microsoft, Microsoft had a great earnings report. It was up 5-6% on Friday. It's one of our largest positions in our fund. We way outperformed on Friday. I mean, if you just saw what's going on with these companies and how cheap they are and how good they look, then I think, it looks good.
RIM is in the news because they cleaned out the executive suite on the weekend. You've been in and out of the RIM stock?
Yes, we have. We've been in and out, largely profitable. We have a position in it right now because it is value. But today, I mean, I think the stock's off 7% on this news. I don't know whether... For us, it went down to $12. Had a rally to 18 on these rumors, someone's going to buy them, etc. But now the news is out. The stock's obviously disappointed in what has happened there. But I think RIM has to go back to retest their lows at around $12. I think just to find out what the market thinks of them down there, then we'll see after that. But RIM is a value name. We are value managers. It's not a big position for us, but I think again, when you look at model price, we think it's worth $43 based on current earnings. But those earnings have been falling a lot, certainly over the last year and a half. So I think we have to see. I think the market is actually telling RIM what they think of what happened actually over the weekend. So,
welcome
we'll just
to the
go there.
C-suite, huh?
Yeah.
Slap 7% off you.
Yeah, I mean, the market's kind of disappointed there.
Yeah.
But obviously, we'll see what happens going forward. So.
Okay, I am interested. You've got your Facebook site launched, debugged. I was looking at it this morning. There's some very interesting comments coming in. Give me the update.
The update is we're up and running. Quite a few people couldn't get it, so we had to get a new server. We've now encrypted it, etc. So as of Monday morning, after a hectic weekend, it looks everything is a go. So to get on there, all you have to do is type in model price in the search app, in the search space of Facebook itself,
Right.
or if just on the your browser, all you have to do is type in apps.facebook.com/model price, one word,
Yeah.
and the app will come up for you. So,
yeah.
It's
a two-stage process. You get to the wall, which is the current stuff coming in,
right.
and then you can go to the app and actually get into the data.
Absolutely, you can actually see the data in terms of the way we do it, in terms of a graphical interface. You can actually call up. We have over 2,200 securities. You can go and look at your stocks in your portfolio, see what it is relative to model price, see where it's trading relative to what we call our economic book values, and just have fun. Just there's a lot of people having fun on it, and they're not necessarily commenting, but
well, the comments I did see were very knowledgeable. They're serious about this.
Absolutely, and I think it's a tool that people can use. And again, just as a check on, in terms of fundamental value, what their positions are. And I think some of them, a lot of them, can be surprising to you in terms of they may be overpriced, they may be underpriced, but the whole social aspect is if you want to talk about it, other people can talk about it if they're interested in the stock. I'm not here to recommend the stocks to you, but I'm sure other people can in terms of the social nature of, I think, investing, and people want to talk about what they own or what they're interested in. So to me, it's we'll see how it goes. We're going to launch in a few weeks in the U.S., so it's nice and quiet now in Canada. We have about 800 people here in Canada looking at it, so we'll see what happens when we open the floodgates. So.
Brian, thanks for your time. I will see you in February, and I will see you on Facebook.
Good to see you again, Michael.